Oh, hello and welcome and hello. My name is Danny Deals. It is Wednesday, August 16th, 2023. It's 5:15 p.m. out here in beautiful sunny Los Angeles. 8:15 out in NYC. Hope it's a great day or night wherever you find yourselves, guys. If the day ends in a Y, we would like to talk with you about SoFi Technologies Incorporated, ticker symbol SOFI. Um Guys, the stock was down 11 cents on the day, a little over 1%, another penny after hours, sitting right at $8.25. The trading today wasn't quite as controlled. You notice yesterday, Tuesday, the stock just basically traded down at a very consistent angle all day. Today, the stock actually pumped a couple times, and I actually saw some green on the chart there, but just got absolutely punished at the very end of the day. Volume was really low for SoFi, 23 million shares. You see, with 12 minutes left in the trading day, the stock was at $8.31, sold off an entire nickel in just 10 minutes, which is pretty unusual. But with volume being so low, it's pretty easy to move the SoFi stock around. People are talking about, oh my God, the stock broke down so much after earnings. I guess, a lot of your opinion on that is going to be where you start from. I start from pre earnings, at a level of about $9.50, and I just base my conclusions off of that. So I'm looking at it like, the NASDAQ, um, when SoFi earnings came out on the first, the Nasdaq was almost at 16,000. And over the next 2 weeks here, the Nasdaq has sold off like 1,000 points, or I don't know what that is, like 6%, 7%. So the market has absolutely gotten hammered since SoFi reported their earnings. Again, today we have talk of another interest rate increase. I think, of course, SoFi is going to get hammered with the overall market. SoFi, often gets hammered post earnings when the market's going up. It doesn't really matter. SoFi just gets hammered post earnings. But if you start from, a realistic level where it was prior to the big pump over 11 that all happened in one day, obviously on massive volume, you basically have the stock falling from $9.55 or wherever we were to now $8.25. And I know that is a pretty substantial decrease percentage wise. But you have to remember, after the last earnings, there was no pump, and the stock just basically fell off a cliff from 650 all the way down in the fours, and then subsequently raised all the way to 950 to more than 2x in short order before the earnings report. So I don't know, guys. I try to ignore pump and dumps. If anything, try to flip some shares, but SoFi is not the type of stock that is just going to run up on that ER 20 points. You should know better. You have to know better. You have to look at history. I just don't think it was a wise buy even above 10 before they reach a net profit. My price target is not 20, 25. It's been very consistent. When they reach earnings, which positive earnings, which I believe they'll announce at the end of January 2024 for Q4 2023, I think the stock is worth $13.75. To that end, guys, Citibank actually came out today. I just saw over the wire, and Citibank raised their price target on the SoFi stock from $10 to $12. And if you look at Ashvin, he is a solid five-star analyst, 59% success rate, and he has 429 ratings under his belt. That hasn't been published over on tip ranks just yet, but if you look at the information on Ortex, guys, there's a lot of filings, by the way. I haven't seen all of these. I looked at this one. This was some kind of smaller stock grant of some restricted shares. These are all Form 4s. There was also a Borton in there yesterday and another Silver Lake in there. So I'll have to go over those. But today, Citigroup raises SoFi Technologies price target to $12 from $10 and maintains its buy rating. So, guys, Citibank is a major bank. SoFi is taking share from them, just like they are Wells Fargo. And still, this analyst cares about his reputation. He's obviously very, very good. You will make money, following his stock picks, and he is right the majority of the time. His picks are proven right when back tested 59% of the time. So that's a very solid record. And, coming from the low eights, $12 represents a massive upside and, above 40%. So I think that rating is very, very significant, only because Citibank is a direct competitor with SoFi. You could also kind of play this. This could be some sort of a pump. A couple of things are leading me to believe that, there might be a pump coming soon. One of those things is just that, the news cycle on the SoFi stock has completely shifted. If you look at the news score for the last 7 days, fintech in general is pretty positive. The 66% positive bullish news sentiment on fintech. But if you look at SoFi, they are completely over to the bullish side. Like, so many bullish articles coming out on SoFi the last couple of days as the stock price has been hammered. It just leads me to believe that, market makers might flip over sometime soon. They might be building something for, another pump, or they're expecting maybe SoFi to release some kind of news on upgrading their trading platform. Noto has certainly hinted at that enough on Twitter or X. Pardon me, X. But anyway, you see just very much of a flip. If I didn't actually highlight this, I don't think last couple weeks in videos, but I always take a look at this news score because it's just informative, not for any real information, or not that these articles necessarily have any value, but it's just what narrative is the financial media creating to help the market makers execute whatever type of plan they may or may not have in mind. So it's just one thing to sort of keep your eye on is that news sentiment. One another thing that sort of led me to that sort of pump thesis, and again, it's just anecdotal information, doesn't really mean anything. Um, but some of the people who tend to really hate the SoFi stock, like, they were actually pumping the SoFi stock. I saw an article on IBD, believe it or not, Investors Business Daily. Investors load up on three stocks beyond the Magnificent Seven, and I don't know if I have to have like a paywall or something for IBD. I don't subscribe to IBD anymore. I just wasn't getting anything out of it. I'm not really a swing trader, more long term. I will swing trade, around earnings if something slaps me in the face or goes up, 20% overnight. But if you actually look at this, this is by Matt Krantz, who is an IBD writer. I don't know if I can ever actually access this article. I read it earlier. A colleague of mine actually does use IBD. But anyway, if you go down, the three stocks are AMD, Berkshire Hathaway, and SoFi Technologies. So, just for SoFi as an $8 billion company, relatively young company, relatively unknown company, for IBD to put them even in an article with AMD and Berkshire Hathaway is pretty good press, because IBD has basically ignored SoFi or had a pretty low rating on the stock all the times that I have checked. And then if you look at, Investor Place, five investors betting big on the SoFi stock, looking at institutional investors. There's a narrative, always put out there that institutions aren't buying the SoFi stock. And it's valid. I mean, they don't have a huge institutional ownership, but Vanguard has come in and, taken more shares. They bought 4.26 million shares in Q2. They own 74 million shares. BlackRock picked up a couple million shares. They own almost 40 million. Silver Lake was flat. They own 30 million. DE Shaw and Company acquired 11 million shares, adding to like the 4 million they had, and State Street added 1.56 million, adding to the 12 million shares that they had. So Vanguard and BlackRock in particular are really well-run companies, two of the most respected financial companies on earth, and the evidence speaks for itself, guys. They saw that dip just like we did, and they just absolutely are loading the boat. I mean, I won't say that's a massive increase in their percentage, but if you look at it, just in that quarter, they increased like 6%, and, Vanguard, something they had, 65, and they brought up 4. So I don't know, guys. I can't figure out all this math in my head after a long day in the office, crunching numbers and smashing my head in a drawer. But the fact is, guys, Vanguard, BlackRock, Silver Lake, these companies own a hell of a lot of SoFi. So it's not like, there's just a lot of little, sort of insignificant companies and hedge funds that have these little stakes that add up to 35%. I mean, Vanguard, for God's sake, owns, 74 million shares out of like a billion or, a little less than a billion in circulation. So I don't know, guys, do the math. I mean, they own more than 7% of the entire, between BlackRock and Vanguard, like these guys own, 12% of the company or something. So these are not, insignificant sort of rash players. And true, they may be short long to some extent. As we'll see in the short interest, I think a lot of these players are short long. But I think it just bodes well, again, for the pump that some of these really, really powerful market makers were loading up on the stock down at the lows. And, some of the smaller people probably unloaded some of their shares on the pump, and some of them probably just held through, but Q2 definitely institutions were buying the stock. Another thing, it must be, hell must have frozen over, because Louis Navalier is actually pumping the SoFi stock, and he has been quite bearish on the stock for a long, long time. He puts out a lot of negative SoFi press. And so here's this one 13 hours ago over on Investor Place, and they've been very very bearish SoFi in general. So they're just spitting out SoFi pumps last couple days. I don't know. Could be nothing, guys. Who knows? Don't count out SoFi. Why this fintech giant remains a long-term bet. Surging largely due to valuation concerns. They were, pulled back. While this may be frustrating turn of events, consider the latest weakness an opportunity to buy rather than a warning to sell. This is the exact opposite thing that this guy usually says in his column. He usually says, wait, don't buy SoFi right now. For him to say buy this pullback, I mean, I don't even think he was saying buy the pullbacks under 5. But I think he likes the stock a lot more right now because somebody's telling him to say this, because somebody wants to maybe pump the stock next week on news of a new trading platform or a dark mode. I don't know. After surging immediately after the fintech's firm latest SoFi stock has since pulled back into the single digits and is still trending lower. Yeah, guys, basically been getting ass hammered for the last 2 weeks. Ever since the pump, it's gone straight down at a pretty defined angle. Yet, and if you just take a look, guys, at the chart, you can basically see this, short-term downtrend is, you know, pretty much powerful, like keeps testing the upper bound of this brownish dotted line, and kind of came up trying to hold up a little bit above that, and it looked like the algo was trying to pull it back down under that line at the end of the day. Certainly pulled it there, 8:16 at 2:10 p.m. came back down trying to pull it under the line. Some buyers came in there, but obviously, guys, the stock has fallen well below this, not well below, but a little bit below this longer term, or I would say medium term channel that we were kind of in here from the, 8s up until 10. And then obviously after the pump, the market makers, you see this angle is very consistent. They just sold off the stock like nonstop. But this line here, guys, this sort of short-term downtrend, very powerful right now. The algos are really, this is how the algos are programmed, because you can see the share price continue to try to recapture this line. It's just like a magnet. So I don't know what's happening with my mouse there, but so guys, this is really like a critical time, obviously, because it's broken down below the channel that the bulls wanted in. You can see it came back up on this particular candle and touched that touched the blue support line, but then was rejected back down into this short-term downward channel. So this is going to be, sort of at the mercy of the market in one sense, but I think some institutions will realize that a high interest rate environment is good for SoFi because, yes, it may impact the student loan opportunity, but they're making a hell of a lot more net interest income off of their personal loans, which are going to be in high demand, I think, if the economy is slowed eventually by these interest rate hikes, which of course the Fed wants it to do. But the American economy is proving extremely resilient and powerful and innovative coming out of COVID. And I think a lot of us knew that. Americans are, very, very hardworking, productive people. Not to say that others aren't, but some of the market forces that may apply other places may not be able to slow the economy quite as readily. And I think a lot of that is sort of all this pent up demand, not only from COVID, but just the flooding of the money into the money supply and into the hands of people during the pandemic was just very, very extreme. So it's not like you can just reverse that sort of in a year. Because you were just pumping trillions and trillions of dollars into people's hands, sort of prop up the economy during COVID. But anyway, back to this article. Although it's far from certain how the stock will perform in the near term, as the long-term growth potential of the financial services industry disruptor remains intact, the chances for higher prices for shares down the road remains very strong. With this, instead of heading for the exit, steer clear. SoFi's recent moves may be favorable to new and existing investors. Here's why. On the one hand, makes sense mark at a positive reaction to the latest results, updates, and guidance, and it goes over the quarter, EBITDA, net revenue, beating expectations, also raised its 2023 outlook. That was very, very slight raise. Based on metrics such as total deposits, total memberships, things continue to move in the right direction. It makes sense after bidding up SoFi 20% on strong results. The market knocked shares back down to pre-earnings price levels, and in fact, quite a bit below pre-earnings price levels. Since then, another sell-side analyst has complained about SoFi's valuation. As you may recall, a few weeks before earnings, I discussed how Morgan Stanley's Jeffrey Adelson issued a bearish rating on the stock, citing its rich valuations compared to other bank stocks. Now, even with the latest numbers accounted for, another sell-sider, Michael Pereira, has come to a similar conclusion. Investor Places William Wright reported a downgrade of the SoFi stock. Buying opportunity may be emerging, with Mr. Market agreeing with the aforementioned analysis. The bear case on the money, not necessarily sure. It's unclear how SoFi stock will perform in the long term. I wouldn't jump to the conclusion that the downside risk outweighs the upside potential with this stock. Current price, he was writing around $8.60. It's gone down, obviously, another 35 cents since that time. A return higher may be within reach within the reasonable time frame, not just back above 10, but maybe even back toward $15 per share. Remember, Mizuho just upgraded to 15, Jefferies to 16, Citibank to 12. So some of the 4 and 5 star analysts are up at those levels, predicting, 40. Even, Jefferies basically has the stock doubling at this time from the low 8s up to 16. So, that may be quite ambitious. It's a little bit over the top in my opinion, but I would love to see it happen. How, for one, based on earnings release, like the neobank likely remains on track to achieve GAAP profitability in Q4. Chances are sticking to this timeline with illicit positive response from the market. Not only that, results starting next quarter in the quarters ahead may just well beat expectations. Mizuho, they talk about that upgrade. Don't forget either that SoFi's shrewd targeting of high earners not well served points to this banking star rising, potentially grabbing a large piece of the market from the incumbent big banks. Bottom line, if you currently own SoFi, now is not the time to sell. I would certainly agree with that. In the coming quarters, continued strong operating results may finally put to bed the fear, uncertainty, and doubt, FUD, that has weighed on this stock's performance since 2022. In fact, if you already own it, remain bullish on the company's long-term prospects. Stock's latest weakness may be an opportunity to increase your position. If you've yet to make the stock in portfolio and your stomach and standard increase ability, consider increased price time to be in the bullish position. First digital bank, blah, blah, blah. SoFi stock earns a B in the portfolio grader. So good press from Louis Navalier. Again, very, very rare. Taking a look at the short guys, we continue to see the short fairly consistent, right at 14% of the free float. Um, However, you continue to see the free float on loan go down all the way down to 9%. Shares on loan, 73 million. Remember, that was 240 million at one point. At least that's what Ortex was reporting. Days to cover all the way down to 1.3. Cost to borrow was very low today. And the utilization, though, is actually up to 24%. So there's less shares available, which is leading me to believe that there's more short long players. If you're gonna short a stock and you're not gonna borrow shares to short it, then you actually have to own shares to short it. And if you're shorting against shares that you already own, short long, those shares are no longer available to loan out to other short sellers. So it takes them off of the table and increases the utilization, but it's not going to show up as shares on loan if you're short long. So that's my take on what's going on here. If you actually understand this and you have some better idea how these numbers make sense, please let me know down in the comments. Guys, today they were saying they returned 1.5 million shares, so 1.8 returned. Only less than 300,000 borrowed for a net of 1.55 million shares returned. And again, that makes sense, guys. If they're just, starting to basically hunker down until the next ER comes and they just want to trade this thing sideways, make money off of options, and then cover themselves whichever way the stock goes. But market makers, their moves, their mechanics are over my head. So, I don't, again, try to normally swing trade around earnings. There's just too much volatility in the SoFi stock. If you see an opportunity and a stock goes up 20% in one day, and you want to sell some of your position and flip those shares back down into the eights, I can't blame you for that. I don't advise people try that unless you have quite a bit of experience doing it. But certainly, no one could blame you if you did that, and we would have ended up in this case with a lot of free shares. The 20% run on that earnings report was, unwarranted in my opinion, because while revenues and users and products and stuff were increasing, the profits per share were not increasing, because again, they are diluting us with stock-based compensation, 75 million, 65 million, 75 million, 80 million every single quarter. So this stock really has to scale and it really has to grow for those EBITDA numbers to be translated to, moving the needle on earnings per share. So, 3 quarters ago, 6 cent loss. Last quarter, 6 cent loss. This past immediate quarter behind us, I think it was 5, 5, and 6, or 6, 6, and 5, or something. But it's been flat. Like the additional earnings have just kept up with the stock-based compensation, and every single quarter they eke out a little more, get closer to that sort of even ground, and that's where they're hoping to be Q4 this year, and GAAP net profit reported beginning of 2024 for the fourth quarter 2023. That's what we're hoping for, folks. That's what Noto and LaPointe tells us they're going to do, and they've been pretty consistent hitting their numbers and under promising and over delivering, guys. But this chart, it doesn't look great to me, but it doesn't look terrible. Again, I have sort of mentioned that when the chart overreacts extremely in one direction, um, it might overreact in the other. So you see this trend line, all of this area, makes a big, flag like this. So it's hard to it's really hard to say what this thing's going to do. Like this push along the upper bound of this triangle, does this mean this is going to it does. It's very, very hard to say because pump and dumps are not normal market activity, and I don't think it's would be unusual to expect an overreaction to the downside when you have just an incredible overreaction to the upside. But guys, the bottom line doesn't change. The market has been hammered. The Nasdaq has been hammered. The last 2 weeks, just basically the top, of course, coincided with SoFi's earnings and that pump and dump. But guys, volume extremely low today. Again, for the SoFi stock, very rare to see it trade less than 25 million shares. So the market makers really clamped down. Just not a lot of retail investors buying. I think still searching for the bottom. And, can't blame them. The stock just keeps getting hammered day after day. There haven't really been any green days in sight. So, if you're looking to buy, you want some proof that the stock is going to reverse and get back up into that channel, we indicated by the blue lines. If you don't see the proof, you're not buying it. The proof is in the pudding. So I think there's a lot of retail money that got out on the pump that is looking to re enter the stock. But they want the best possible price. I think people are really watching their entry points because with the Federal Reserve looking to ass hammer the economy, and even though SoFi I think did put in a pretty solid earnings report, certainly didn't get any closer to net profit, at least in terms of a simplistic view of earnings per share. I know they're setting things up and they think they're definitely going to get to that net profit in Q4, but guys, nothing is for sure and nothing is forever, and things can change very, very quickly. So we just have to keep our eye on it, see what's going to happen. If you want to come back into the stock, you're saying, is this a good point? Um, I look at below 10 as a pretty good entry point. A lot of smart people paid a lot more than that back in the SPAC days. That was a completely different time. These days, you can find good companies on sale. Again, I was beating on the table, telling people buy the SoFi stock at 5. This is an absurd valuation. But right now, I don't think it's worth 13, 12. Right now, what do I think the stock's worth? I think the stock's worth about $10 right now until they show me gap net profit. Once they show me gap net profit and that they're going to, that the books look like they're going to consistently and increase that gap net profit, I think that's a $13.75 stock. That's my opinion. Whatever your opinion, please share it with me down in the comments. Love to hear from you. Hope you guys had a great hump day. Hope you guys have a good night and a good rest of your week. Again, it's Danny Deals for Un Poco Moss, Hurricane Lopez, and Stock Karen. You guys have a great night, and we'll talk at you again real, real soon. Bye-bye now.